In this session, we are starting off with a brand new topic on fund flow and cash flow. This session, we will be covering this in two parts. At first, we will be looking at what is fund flow statement. And at the second half of the session, we will be following what is meant by cash flow statement. So these are two comprehensive topics by themselves, and they are also very critical or very important from a management accountant's perspective because it helps us to understand in depth. These are two tools which will help us to carry out in-depth analysis with regards to how effectively or how well is a company functioning. Both fund flow as well as cash flow, it will help us to understand, have an in-depth analysis or understanding regarding the functioning of a company. Now let's move on. Let's start off with this. So before we start off with fund flow statement, we have to try and first understand what is meant by fund. Now, fund, the term fund, it has got different meanings depending on the context. The meaning of fund would vary from scenario to scenario, and the assumption or the meaning of fund that we perceive in our mind depends on the context with which we are talking. Are we talking about from an organization's point of view? Are we talking about a requirement point of view? Are we talking about personal need point of view? So the term fund has got different meanings depending on how or depending on with what context are we talking about. When we talk from a management accounting's point of view, the term fund refers to all the financial resources of a company. The term fund, it refers to the financial resources of a company. So any sort or any type of financial resource that a company has, end of the day, it will burn down to fund. Now, again, from a management accounting's point of view, the most acceptable meaning for the term fund is the reference to working capital. What is meant by working capital? In a nutshell, working capital refers to the need or the amount of money which is needed by a business for its day-to-day activities. So, for example, if you look at the organization for a given need or for a given day, what are the requirements that the business has, or what are the requirements that the firm has, and that is what is meant by fund. Okay, that is what is meant by fund. So, fund refers to the most acceptable meaning of the term fund. So fund, whenever we bring in the context or whenever we bring in the meaning of the term fund from a management accountant's point of view, the most acceptable reference would be the money that is needed for your day-to-day activities. So in that note, at this point of time, I want to clarify there is a stark difference between the term fund and the term cash. Though in our colloquial usage or in our day-to-day usage, these are two terms that we very comfortably interchange and we use. So for us, fund and cash effectively means the same. But that is not the case when we talk or when we speak from an organization's point of view. From an organization's point of view, these two are two different things, or these are two different. So the fund and cash are ideally not the same when we talk about from an organization's point of discussion. The next important aspect that you have to remember is any transaction that results in an increase or decrease in the fund or working capital in an organization, those transaction is referred to as flow of fund. Now let's look at flow of fund a little bit more in detail. So any transaction that brings about a change in the working capital, if you have carried out the transaction and the transaction is making a change, it is bringing about a change in the working capital, that transaction is referred to as flow of fund. Now, we already saw or we already learned that one way that we can be looking at fund is that it refers to working capital. So working capital is the difference between current assets and current liabilities. Okay, working capital is the measure or it is the difference of current asset and current liabilities. Now, moving a little further, if the transaction brings about an increase in the fund, whatever transaction that we have carried out, if that transaction brings about an increase in the fund, it is called as inflow of fund, or it is the transaction is referred to as source of fund. So whatever transaction that you're carrying out, if it causes or if it results or if it translates to an increase in the working capital, that is referred to as an inflow of fund or source of fund. If the transaction results in a decrease in the fund, if the transaction that you have carried out, it is bringing about or is causing a drop in the level of fund that you have, it is called as outflow of fund, or it is called as application of fund. Okay, so the transaction would be called as outflow of fund, or it is called as application of fund. So that is what is meant by outflow of fund and inflow of fund. So together, any transaction that brings about a change in it is called as flow of. Now let's try and understand what is meant by fund flow statement. Let's look at the definitions of fund flow statement. A statement of source and application of fund is a technical device designed to analyze the changes in the financial condition of a business enterprise between two dates. Okay? So it is a statement, and this statement is talking about what are the changes that has happened in your organization, and as a result of which, how these transactions has brought about a change in the financial condition between two dates. So that is what is meant by fund flow statement. Next is what another definition for a fund flow statement is a statement that is prospective or retrospective, setting out sources and application of funds of an enterprise. The purpose of the statement is to indicate clearly the requirement of fund and how they are proposed to be raised and efficient utilization and application of. So it's a statement which talks about how your business has gone about utilizing the fund. Now let's look at some in simple words what is meant by fund flow statement. So the rationale behind the preparation of fund flow statement is that it analyzes the transactions that has happened between two balance sheets. Whenever we prepare final accounts of an organization, one important aspect that you have to remember is final accounts is always prepared with the help of final accounts is always prepared at the end of the accounting period. So for example, you will be preparing this year, you will be preparing your financial statement as on 31st March 2021. Last year, you had prepared your financial statement. You prepared your financial statement on 31st March 2020. So at the end of the financial period, you will be preparing the fund. You will be preparing the balance sheet. But balance sheet, it is referred to as a positional statement. You're really not sure what has happened. Okay? You're really not sure what has happened during the course of the or the time period between two balance sheets. So let me explain this to you with another example. So let's talk about balance sheet, and let's say balance sheet on 31st March 2020, the value of land is rupees 25,000, and on 31st March 2021, the value of land is rupees 40,000. The value of land is rupees, oh, my mistake. Okay, let me just redo that once again. So on 31st March 2020, the value of land, let's say, is rupees 25,000, and on 31st March 2021, the value of land is rupees 40,000. Okay, so let's assume this to be the value. Okay, this to be the value. So when we look at these two values we've got by looking at the balance sheet, but we're really not sure what were the kind of changes which has happened between these two balance sheets. So let me give you a possibility. Here, one possibility is you could have sold land worth 5,000 and bought land worth 20,000. Yes, one possibility. Another possibility would be sold land worth 25,000 and bought, and you would have bought land worth 40,000. Okay, this is another possibility. Yes. Okay, so another possibility would be you bought some more new land. Okay, you bought land worth rupees 25,000 and sold land worth rupees 10,000. This is another possibility. So the possibilities over here are numerous. Okay, the possibilities over here are numerous. So by merely looking at the balance sheets, it is very difficult for us to understand what are the changes, or what were the changes that has taken place in the organization as a result of which these values are like this. So by merely looking at the balance sheets, you will not be able to understand this. Okay? So this is the reason why we would be needing some additional statement which helps us to understand what were the changes that have taken place in an organization. So fund flow statement, it helps you to validate the movement of fund from the previous financial year to the current year. What are the changes that has happened? Where, if at all, there were some changes in the money, in the changes in the cash, how exactly has it been utilized? So that is what you will come to know with the help of fund flow statement. So like I said, it helps you to understand what were the movements. It helps you to reflect the changes in financial position or working capital position in two different ways. So in a nutshell, this is what is meant by fund flow statement. Moving on, let's try and understand what are the objectives. Why do you really need fund flow statement? So one is that working capital position, and it helps you to understand what is the future position of the company. Second reason is that you will come to know the reasons for the change in working capital during the period. How exactly has the money gone about with the change? Next thing is it helps you to assess the financial condition of the firm. How well is the firm doing? And then it talks about the most important changes that have taken place during the particular period. So these are some objectives of the fund flow statement. Now we will talk about the importance. Why is it really important in an organization? Or when we talk about fund flow statement, who would be looking at the fund flow statement? First is that fund flow statement would be needed by the shareholder. Now, who are shareholders? Shareholders are investors in your organization. They are people who are putting money into your organization. They're anticipating some returns in the future. So for them, before they make that crucial decision, or before they make that important decision, they must know how well is the organization functioning. They must know how well is the organization able to carry out its activities. So here, it provides information to the investor regarding the availability of the funds. So it helps you to understand what is the total amount of resources that the business really has. So if the business is making you a promise, okay, we are going to invest in the new machinery, we are going to invest into new land, we are going to invest into new product. So before you come to a conclusion, should you invest your money here or not, you would be able to take a call by understanding the fund position of the firm. Second requirement, or second reason as to why this is important for the shareholders, because it will help them to understand the ability of the firm to pay dividend. So remember, whenever a shareholder invests money into shares, whenever they buy shares, they're anticipating some return. Now, one of the possible returns that they're anticipating from the shares of a company is in the form of dividend. What is dividend? Dividend is a portion of the profit that is set aside. Now, this portion of profit is set aside so that the investors, so that this money can be paid to the investors. Next is how is a fund flow statement useful for creditors and debenture holders? Now, who are creditors, who are debenture holders? Creditors are people from whom you have taken money. So like your financial institutions, banks, you have taken a loan from them, or you have raised some debentures, you have taken money and you have issued them debenture certificates. So how is this really important for them? It will help them to understand the money that has been borrowed from you, or the money that has been taken from the financial institutions, has it been utilized or not? Has this money been effectively utilized or not? It will enable them to judge the capacity of the company to repay the loan. So is the company really in a position to repay the loan back? Okay. Are they well versed? Are they in a position, they have taken money from you? Are they well equipped to pay the money back to you? Okay. So that you will come to know with the help of looking at the fund flow statement. Second important people for whom this is that now we'll be talking a little bit more specific from financial institutions. Um, you have to evaluate the credit worthiness of the company or the organization before you sanction a loan from them. So here's the deal. I work at an organization. I'm drawing certain amount of money from that organization. I'm getting salary. But just because I'm earning salary, that does not mean that I could go tomorrow and take a 10 crore loan. If I were to take a 10 crore loan, then am I really worthy to take a 10 crore loan? So that judgment, that evaluation is done with the help of fund flow statement. So it will help you to understand, are you really in a position, or are you quite comfortable in terms of paying the money off? Then it will help you to evaluate the capacity of the company to repay loans or debentures. And it will also help you to understand how well is the company equipped for repaying the money in the future. Now, let's talk about fund flows importance from management. It will help you to plan out for your investments. So if the company has to plan for some investments for the future, is the money available? You have to buy land. Okay, you're buying land worth 25,000. Do you have money to buy land worth 25,000? You have to take some, short-term investments. You have to buy some, let's say, machinery. You have to buy some loan. So is your company well equipped to take these kind of decisions? It will also help your management to understand, are you utilizing your funds effectively? Are you channelizing your money in a good way? Also, for the management to pay dividend to the shareholders, they would need some reference points. They would need some a measure to understand, are they really in a comfortable position to pay that money back? So these are the areas where fund flow statement would be important. Another area where fund flow statement would be really beneficial for the management is to estimate the working capital requirement. So working capital refers to the amount of money that you would be needing for your day-to-day activities. You may have to buy raw material, you may have to pay wages, you may have to pay your electricity bill, you may have to pay your maintenance charges. Are you having sufficient amount of money available for this? That is what is meant by fund flow statement. Next is, let's talk about the limitations of fund flow statement. Is fund flow statement really beneficial or not? Okay, so let's talk about that. Now, remember, fund flow statement you are preparing with the help of a balance sheet. Balance sheet by itself is a historical document. Okay? Balance sheet by itself is a historical document. So historical document means you're referring to some document of the past, and then you're using that as your base. You're using that as your reference point to prepare more statements. So remember, balance sheet itself is historical. Okay, so balance sheet itself is historical. So since balance sheet itself is historical, you're using a historical statement to prepare another historical statement. So what validity does that statement have? Okay, what validity does that statement have? Is it really a sound statement for you to refer to? We are really not sure. We are really not very sure. So that puts us in a lot of questions. Next thing is, when you talk about fund flow statement, it is a statement which is not original. What does that mean? So you're just depending on facts that has been presented in the balance sheet. You're merely rearranging those statements, and then you're bringing forth these values. So it is not necessary that whatever you have had in your fund flow statement, it is original in nature. Okay, it is original in nature. So that is what is meant by this. It is not original in nature. So which means you're depending on someone of the past. You're depending on statements of the past. You're depending on a statement which has been provided to you from the past, and then you are depending on this, and then you're preparing another statement. So we have a lot of questions regarding the validity and the genuinity of this. Then another thing about fund flow statement is that it does not talk about the continuous changes. Okay? It does not talk about what are the continuous changes which are happening in the organization. So it is a statement, and the statement is telling us uh, uh, it is telling us that these are the kind of things which has happened, and then it will help you to understand, is it really relevant or not. Then another important fact about fund flow statement is that fund flow statement, it will it will really not help you to understand cash position, because we all saw that cash is basically the fund flow statement is talking about fund position, and we saw that cash position is a subset of fund position. So you referring to the fund position, you will not be able to understand the cash position. So for that, you still will need to go about with the preparation of the fund flow statement. Sorry, cash flow statement. So with that note, we have looked upon what is fund. We have understood what is meant by flow of fund. We spoke about the objectives. We spoke about the importance, and finally we spoke about the limit.